So today we will start the next part, that is registration. So what is registration? As simple as that. Whatever you do, whatever you do in any act, in any law, or even if you do CAT course, you need to register yourself. You have an identity. The identity has to be created. There has to be one unique registration number which should be assigned to you that will recognize you as a person, because no one can recognize you by name. With the same name there can be so many people. So there has to be a unique registration number for each and every person who are required to do anything in GST law. So same way GST also have the registration provisions that everyone has to be identified uniquely to collect tax, to avail ITC, so many things which are required to do under the GST Act has to be identified uniquely by way of a registration. So that is why registration is required. Now, who are persons liable for registration? Section 22 and 24 talks about that. So we will talk briefly about that, not in very detail, because it's a very long list of persons liable for registration. So we'll talk about only those things which are very much required, or the basic things. Number one, if you are providing services and your turnover exceeds 20 lakh rupees in a year. I repeat, if you are providing services and your turnover in a year exceeds 20 lakh rupees, then you are required to obtain registration under GST. For northeastern state, the limit is not 20 lakh, it is 10 lakhs. Next is for the goods. The limit is 40 lakh. If you are providing goods, then the limit applies is 40 lakhs and 20 lakh for northeastern states. There are two types of schemes wherein you can obtain registration. One is regular taxpayer and the another one is composition taxpayer. So there are two types of schemes. One is regular taxpayer, another one is composition taxpayer. So we can obtain registration in both the schemes as per your requirement. In regular scheme, you need to file quarterly returns and you need to pay tax monthly basis, or if you are a big taxpayer above 5 crore, you need to pay regular tax under GST, that is every month. So that is the scheme of GST in regular scheme. In composition scheme, and in composition scheme, you need not file returns every quarter, every month, pay tax. No, it's a liberalized scheme. You need not take output, input, or all these problems and complexities. You just need to calculate your sale and pay tax at the rate 1%. That's it. And that also you need to pay on a quarterly basis and just need to file a form, not even a return. It's a form CMP08. So that's a simple form that you need to file. Just write your sale, write the tax amount and file it and pay the tax. So it's a liberalized scheme. There are two schemes. One is regular taxpayer and another one is composition taxpayer. Then the next point, in composition, only for the limit for the composition scheme, not every person can obtain this option. If you want to go for composition, your turnover should not exceed 1.5 crore in a year. If you are providing goods, if you are supplying goods, if you are supplying services, then your turnover should not exceed 50 lakh. So that is the basic rule behind composition scheme as well as regular scheme that you can opt for. The next one is, as I just told, the rate of tax, as I told in the composition scheme. See, in the regular scheme, the rates are different. Say 12%, 5%, 18%, 28%. You need to pay tax at these rates on the output and take input of these rates and then pay the differential tax amount. In composition, it's a straight away tax on the sales amount. So if you have sold 1 crore rupees, you have to pay 1 lakh rupees. If you have sold 50 lakh rupees, you need to pay 50,000 rupees. So that's a tax rate on goods. If you are a restaurant, then you need to pay tax at the rate 5%. If you are a service provider, you need to pay tax at the rate 6%. If you are a bricks manufacturer, you need to pay tax at 6%. There is no ITC. There is no input tax credit allowed. You just need to pay straight away this amount of tax. That's it. Now, who else is required to take registration? So in section 22 and 24 we were talking about. So there are so many other people who are required to take, but just for brief understanding, I'm telling you. So this is non-resident taxable person providing services or goods in India that have to compulsorily required to take registration. Even if your turnover is not 20 lakh, you have to obtain registered if you are a non-resident taxable person providing goods and services in India. So I hope it's clear till now. If there are any doubts, you can definitely write on the chat box. We will take at the last. Now, if you take a registration, you will be allotted either GSTIN, GST identification number, or UIN, unique identification number. Now, what is the difference? So UIN, GSTIN, we all know what is GSTIN. If any person applies for GST registration, he would be allotted GSTIN. But if a specialized agency like United Nations Organization, any multilateral financial institution under United Nations Act, any embassies, if they apply for a GST registration, they will be allotted UIN, unique identification number. Why? Why they are different? Because see, just think about a situation. Can we charge tax from these people who are very respectful, very important persons for any country? They are from UNO, United Nations Organization. No, we cannot charge. So under GST Act, there is a special exemption for these people. They cannot be charged any GST. But just think about a situation that an embassy, you must be knowing the other nations representatives in India, the United, like American representative, Chinese representative, all countries representatives are there in India to have discussions regarding any matter which are of both countries' importance. So they discuss anything, they take actions accordingly. So for that, embassies are there. So the embassy, if they are in India, they are situated in India, then naturally there are few people in the embassy and they have to, for their livelihood, for their own purposes, they might purchase chairs, they might have uh, fans, they might have ACs. So many things are there in India which they might have to purchase from India to live in India as an embassy person. Now suppose an embassy purchased an air conditioner, naturally they will be charged GST. And as I told, we cannot charge them. They are the guests of India, special guests of India. We cannot charge them GST because ultimately the GST would go to government. What government says, just claim refund of GST paid. So what embassy would do, they will apply for registration as UIN, then they will claim refund of whatever tax they have paid in form of anything, maybe on AC, on a chair, or anything they have purchased from India for their United Nations activity or foreign activities. They can get refund. Now, before GST, there was VAT. Under VAT, there was TIN, taxpayer identification number. The TIN was of 10 digit. Before GST, for services, there was service tax. For service tax, there was service tax number. Now, this was also of 15 digits. And now GSTIN, this is also of 15 digit. In GST 15-digit code, first two digits are for state. So every state is assigned with a number. For example, Rajasthan is assigned with the number 08. So that's a 2-digit state code. Similarly, Maharashtra is assigned with 27. Similarly, Delhi is assigned with 08. Haryana is assigned with 07. So in the same way, Delhi is assigned with 06, Haryana is assigned with 07, Rajasthan is assigned with 08, Maharashtra 27. Every state has a fixed code. So first two digit of GST number, it's state code. The next 10 digits are PIN number of the person who is applying. Next one digit is representing number of registrations in the state. For example, if I am applying my first registration in the state in Rajasthan, the, the 13th digit, 2 for state code, 10 for 10, then the 13th digit would come with be 1. After first registration, I apply for another registration. Then this 13th digit would come as 2 and so on. Then the next digit is Z. That is a fixed digit. There is no change for any person. It's Z. Then the last digit is a check digit. It's a calculated digit by formula. So there is a formula for calculating this 15th digit of GST number, and this is auto calculated. So there's a long formula which we cannot understand by our own mind, but the formula calculates the value of 15th digit, and that's how this 15 digit GST number is made. What is input tax? We will talk about it later on. For now, just understand this, what we are talking about. So I hope there is no query in the registration part. Now we will go to the next thing, that is supply. What is supply? I told you when GST comes, when GST is applicable, whenever there is a supply of goods or services. So GST is very clear. GST is on supply of goods and services. Now, what is supply? What is the definition of supply? Now, what GST Act says about it? What is definition of supply? So it's an inclusive definition. Now, what is inclusive definition? Simple. There are three types of definitions in India, in any law. One is exhaustive application, exhaustive definition. What is exhaustive definition? Whatever written in the definition is final, nothing else. For example, if you say okay, so what are the exams included? What are the exams in CMA? If anyone of you do CMA, cost and management accountant, what are the exams that has to be conducted? So I would say foundation, inter, and finals. Now what I said is an exhaustive definition of CMA exams. What is CMA exam? Foundation, inter, final. This is an exhaustive definition. There is no other exam except these three. So that is why this is an exhaustive definition. Now, exclusive definition. So what is exclusive definition? CMA exam CMA exam includes all exams that are being conducted by the Institute of Cost and Management Accountant of India, but does not include CAT exam. This is an exclusive definition. Now, what is inclusive definition? So basically, the cost and management accountant the CMA exams includes all exams conducted by Institute of Cost and Management Accountants of India, and also include also include CMA foundation, inter and final. So this is an inclusive definition. It says that everything is CMA exam, but these three are definitely CMA exams. So this is an inclusive definition. I just told a small thing about law. Any law if you read, there are three type of definition. One is inclusive, exclusive, exhaustive. Supply in GST law. Supply in GST law has an inclusive definition. That means everything is supply. Everything is supply, but also includes these few things. So what is supply? The law says all the activities in course of furtherance of business, it's supply. But also includes, what is included? Supply of goods or services. So what is included? For a consideration. So supply includes supply of goods or services. Now what is said that the supply has to be of either goods or services. Supply has to be of either goods or services, nothing else. Very clear. For consideration, if something is given for free, it's not a supply. It's not at all a supply. So if something is given for free, it's not a supply. Supply in the course or furtherance of business. Supply has to be for the purpose of business. Either it has to be in the course of business or for furtherance of business. Either you want to earn money through business or you want to earn money in future. You want to grow the business, you want to furtherance the business. That is supply. Supply made by a taxable person. Not every person in the whole world who does these things are supply. Supply made by a taxable person is only supply. And who is taxable person? It has a separate definition. For your understanding, who is taxable person? Who lives in India. Generally, that's a taxable person. There are so many other exceptions. We will talk about that later on. But for now, very clear, the person who lives in India, if he does a supply of goods or services for a consideration in the course of furtherance of business, it's a supply. Now, for the course of furtherance of business, let me take a negative example. If you give cycle to your friend, or bike to your friend on rent. Okay, friend, no problem. You just take my bike and do one thing. Just put some petrol of 100 rupees into it and then give me back. Now, you have done some activity. You have supplied your bike or maybe service of rent of your bike to the other person. You have charged petrol as 100 rupees. Is it a supply? No, because it's not in course of furtherance of business. You are not doing business of this thing. It's just a casual activity you are doing. It's not a supply at all. Supply should be in the course of furtherance of business. Without business, it cannot be a supply. I hope I'm clear. But if you have a business of giving bikes on rent, it will be supply because it's none other than but it's your business. Supply also should be a taxable supply. Supply cannot be non-taxable supply. For example, so how does it mean? There are so many things which are taxable under GST, which are so many things which are not taxable under GST. It has a vast chapter. In future, it will come. So whatever is taxable under GST, whatever list is there for the taxable things, that only GST applicable. That is also only a supply. Non-taxable is not a supply. Supply should be in the taxable territory. If you are an Indian, you provide some service to foreign person in foreign, it's not a supply. It should be within India. Again, it's a general definition. There are so many other things also. Exceptions are also there. So there are few exceptions about supplied without consideration. So why? For example, you have given Diwali gift to your employees. Yes, it's a supply. It's a supply. It was not, it was without consideration. I didn't charge. I didn't charge from my employees for giving the Diwali gift. It's just given free of cost. It's a supply. These are the exceptions. Import of goods or services, even without course. If you import something from out of India, if you import something from out of India, it's in supply. Even if you import personal things, that's in supply. So these are few exceptions just I discussed. There are so many other exceptions as well. But for now, we are not discussing it because we are doing accounting course, accounting technicians, certificate of accounting technicians. We just need to know this much. If we go into deep, we also will become GST consultant. So we need not become GST consultant. We should become accounting technician. For the accounting purposes, this much is also only required. And that's why we are not teaching you everything, because GST law is very, very, very big. If we start teaching you everything, it will be huge. And sometimes things may go out of your head. You would say, what is this? We cannot remember all these. So just need to remember this much. Now, what is time of supply? So point of taxation. Basically, every supply, when the tax would be applicable? It's very important question. So there are so many times, so many points that may come when someone say now pay tax, now pay tax, or now pay tax. For example, I am giving you this class. I am giving you this class. I am getting some consideration from the institute for giving this class. When the tax should be applicable? When should I pay GST on this amount? Because I am providing services. That's my business. I'm charging consideration. So everything is there. I'm in India. I'm providing services in India. So everything is there. It's a taxable service. What service which I'm providing to you, it's a taxable service. Point is, when the tax should be paid. Should I pay tax immediately when I have given the class? That means when I just end the class, the GST officer would come and say, oh, you have given the class, give me the tax. Give me the tax for this class. No, it's not that way. Or whether should I deposit it my own same day? No, it's not in even that way. Or should I deposit till the month end? No, even it's not in that way. Or even the institute does not pay me, then also should I pay the tax? No, it's not even that way. So there are so many things which we need to understand when the tax should be paid. The time of supply, when the tax is due. See, I have given the services, that is for sure. I will get the money, that is also for sure. But the point is when the tax should be paid. Today, tomorrow, month end, or when. So the provision is simple. So why it is required? It determines due date for payment of tax. It determines tax and value as well. So what law says about it? The law is very clear. Earlier of the following. So there are three events which I'm going to talk about. Whatever events occurs before, whatever event occurs before the tax has to be paid. Either of the three taxes. Number one, issuing of invoice. That is, when I issue invoice to the institute, then the tax has to be paid. The date of issue of invoice. If I don't issue invoice at all to institute, then the due date of issuing invoice. What is due date? So for goods, the due date for issuance of invoice is immediate. That means the day I sell the goods, I have to generate invoice. And since If I have not generated invoice, that means the due date of pay tax is also arised. Even if I have not issued invoice or not, that doesn't matter, because the invoice must be issued same day of selling the goods, the removal of goods. When the goods are transported out of the premises, the bill has to be made. It's a clear rule. So the due date for issuing of invoice for the goods is same day. But for the services, it's different. Services, it says 30 days from completion of service. For example, when will the service will be completed for our case? In February, because in February only the classes will be complete. So the service of teaching would complete in February. In that case, the tax would be applicable in February. Because, and not even in February, if I don't issue invoice in February, then the due date for issuing invoice is March, 30 days from the date of completion of service. So in February the service will be completed, and in 30 days I have to issue invoice. The due date for issuing invoice is March, say 31st March. Then the 31st March tax becomes due even if I don't issue invoice. And if I issue invoice, the date arises. Even if I issue invoice today, the date would arise today. So the date is date of issuance invoice or due date of issuance of invoice, whichever is earlier. That is the first case. Second case, date of I have not issued the invoice, and the due date also not arrived. Due date for issue of invoice has also not arrived. I have not issued invoice, but I received the payment, maybe on advance basis or maybe any other basis. Then also tax becomes due. Service, neither payment received nor bill raised, nor that I have the due date for issue of invoice has arisen. Then the date of completion of service shall be the date on which the tax becomes due. So actually when the tax becomes due is either of the three, whichever comes early would be the due dates when the tax has to be paid. Now what is the real due date for paying tax? So basically due date is about due month. If the month is February, the tax must be paid by 20th March. If the due date comes in March, then the tax should be paid by 20th April. So due date not, it's not payment due date, it's due date of taxable event arising when the tax becomes due. So whatever tax becomes due in February must be paid by 20th March. Whatever tax becomes due in March must be paid by 20th April. Now what will be the date of payment? Because I said date of receipt of payment. So when it will be considered. Sometimes the cash is received. Now you cannot track when the cash was received. So the law says date of entry in books or date of actual receipt in bank. So whenever you have in your accounting, you have written that I have received cash or I have received payment from this person, maybe check or any other mode, then the tax becomes due. Then the payment will be considered completed and then accordingly tax will be due. Similarly, if the payment is received in bank, automatically the date of receipt of payment in the bank shall be considered. So this is the things we need to talk about today. We are completing like we should complete 3 pages per day in GST in whatever your module is there. I'm completing almost 4 to 5 pages per day. So that's why the today's things are over. It's complete from my side. If there are any questions, please let me know. I'm here for next 10 more minutes. If there are any questions from these slides. Okay, let us take the last one again. When the tax would become due. Due and payment are different. When the tax would become due and the when would tax be paid. So payment I already told, the payment will be made in the next month's 20th, by the next month's 20th, but it becomes due in some month. The question is when the tax would become due. So it's simple. When the tax would become due is earliest of the three dates: date of payment, date of completion of service, or date of invoice or due date of invoice, whichever is earlier. So whatever happens first, the tax would become due, then it has to be paid in the next month's 20th. So that is the rule. So this is the simple thing. What is invoice and what it contains? So this is not relevant to the current topic. This will come in due course. There are topics related to that. We will talk about invoice in the next chapter. Any more questions? Any more questions you may ask? There are 8 more minutes. So great job. I'm getting the questions. That please repeat. Okay, let me repeat. We have time left. So what is supply in GST? It's an inclusive definition. So there are so many things which are included in GST. So what is that? It should be supply of goods or services. There should be a consideration. What is consideration? Monetary or non-monetary. Someone has to give something. It cannot be free. Supply should be in the course of furtherance of business. There has to be business. Without business, no GST would be applicable. Supply should be made by a taxable person. Not everybody is required under GST. If I'm not a registered person, there's a definition of taxable person. So the person who makes taxable supply is a taxable person. So there has to be a taxable supply. The supply should be made within the taxable territory. So every activity is a supply, but the supply should have these components. If these components are there in the activity done in the business, then it's a supply, otherwise it's not a supply. I hope it's clear now. Since there are no questions and everything is done for today, so I'm closing the class for patient listening. Thank you.